Joining us now is Tariq Fancy, the Rumi Initiative founder and CEO and former BlackRock Chief Investment Officer for Sustainable Investing. Tariq, it's great to have you here. It's because of your former position, the depth of knowledge you have about these strategies that we so appreciate your point of view on whether this is really achieving environmental goals. And we should add, part of the criticism we've sometimes offered about ESG is that environmental is only one plank of that. So it's not clear whether those goals should be first and foremost, or maybe one of three different social, governmental investing approaches that people are focused on. What are the main concerns that you have come away with here?
So the concerns you bring up are important ones, but they're almost in the weeds. And if you zoom out, the big picture is that, ESG is kind of today being sold as all things to all people, right? It's this ticket to magical, better returns in your portfolio. It's also going to create all this great impact and solve our social challenges. And having been a trained investor who sat atop the largest pool of assets in capitalism trying to integrate ESG, I can tell you confidently that it's not that useful to investing. It works in a few cases, but most of them, short-term strategies, liquid strategies, it's not that useful. Secondly, there's pretty much no impact that I could see that's demonstrable. There's evidence around saying that, this is actually allocating more capital to good causes in a way that can possibly solve our solutions. And the biggest problem is that there's evidence emerging that it's becoming a placebo, a deadly distraction, because we're putting all our effort into this and we're ignoring what the experts are telling us, which is that we need policy reform in order to address our biggest social and environmental challenges.
So you're sort of pointing the finger to government, saying that they need to be the ones driving, if you want to call it carbon goals or fossil fuel reduction targets and that kind of thing. Let me just offer sort of the counter perspective on your criticisms, which is many of those who think that this energy transition is well underway point to the success of the ESG movement in things like Exxon, engine number one. They basically, even those who are bullish on oil this year, Tariq, say that part of the reason is underinvestment driven by ESG divestment from a lot of these projects. So the people who are looking at the price of oil or on, the emissions trends in the U.S. are pointing the finger back to this investing trend as one of the reasons why those advancements are being made.
Yeah, it's an odd argument to me for a few reasons. First of all, these are all free market theories around the market self-correcting itself for what we've known for decades is the largest market failure in history, number one. Number two, there's no evidence that any of these things are reducing emissions. I mean, I haven't seen any emissions or anything to show that any emissions have been reduced from anything that Engine 1 did with Exxon. And I would add that if you have a financial system which is constructed of a series of transactions where everyone has a fiduciary obligation to focus not on social values, but on dollar value, and then you have that combined with a market failure where it's clearly cheaper to burn fossil fuels than we need for it to be, and we need to make a quick transition. Fiduciary duty to market failure, doesn't matter how you look at it, there's going to be more capital going to causes we don't want than there should be. And that's why Nobel Prize winning economists have been saying for decades, we need a price on carbon. And the case for the price on carbon actually gets lower. The public gets misled. The more you say, no, the solution isn't a carbon tax, which, the experts are saying, the solution is actually to put this low carbon ETF with higher fees.
Can it be both? And it's interesting you talk about carbon ETFs. I think we're just starting to see them in the U.S. and Europe is obviously way ahead in putting a price on carbon. And they're starting to really see that price, up at a significant level. But it can be both and, right? I mean, let's go back to the case of Exxon. Engine number one only had the success, I think, in May. It's only August. So we know they're not going to be reducing emissions in 3 months' time. But there's now speculation about Exxon making acquisitions in possibly the electric vehicle kind of space. Look at the supply chain there and where this is all heading. If that all happens, it's all going to be traced back to the ESG pressures that they're under. That would be a major turn of events.
Would it really, though? Because what they're going to do is they're going to sell assets to private companies. If you just only pressure public companies and you do it in this way, first of all, it's like playing whack-a-mole. I mean, the markets are a big place. That's not a systemic solution. A carbon tax is a systemic solution, right? Going and basically telling them one by one through proxy fights. I mean, honestly, is the solution to climate change a good hedge fund to fight the bad ones? I mean, you have to actually stop and ask yourself that, why are we even talking about ideas like this? It's decades since there's been this neoliberal consensus that markets will correct on their own. And we're still finding ourselves in this position where every solution that we're banding around, none of them are being, honestly, there's no serious economist that has said that divestment or engagement particularly useful way to fight climate change. And again, they're going to go on the board. They're going to have a fiduciary duty to maximize returns. It's an oil company. I mean, they might lean a little bit more in the direction of saying, okay, we could do a bit more renewable, but the solution is not that they're going to reduce the production and the extraction of fossil fuels at the rate we need for it to happen in society, right? I mean, they're still subject to fiduciary duty and their shareholder return focus.